after reporting mixed sales data for the month of March. Motilal Oswal, in a recent note, in fact, indicates the auto sector is witnessing demand moderation due to higher inflation and interest rates. Sonia, this is something that Maruti had also indicated in their commentary to us. What does Motilal say?
So, the Motilal report is very interesting. They've actually lowered their EPS estimates and earnings estimates for a couple of stocks. I'll tell you that in a bit. But the thesis is that there's moderation of growth that is visible across the auto sector. They've lowered their FY24 EPS for a couple of companies, both OEMs and the auto ancillaries. For Sona Comstar, for Endurance Tech, they've lowered it by about 8 to 11%. For Bajaj Auto, it's 5%. Now, if you notice something in common, there's the export factor here. So companies that have an export exposure because of the slowdown in the export market is something that they are worried about. They say that some of the earlier headwinds have receded, but there are new headwinds which are emerging now. There are signs of demand moderation in certain segments because of inflation as well as higher interest rates. The weak global macros have raised some fresh demand concerns for players having a global exposure, and perhaps that's the reason that explains why they have lowered the EPS for Bajaj Auto. They also say that commodity prices are seeing some inflation from the recent lows, so that will be an added, headwind for the sector. But they do like a couple of domestic players. Ashok Leyland and Tata Motors are their top picks in the OEM space, and in the auto ancillary space, they like Motherson Sumi and they also like Bharat Forge. But let's find out, what's happening in terms of the overall industry. Manish Raj Singhania, the president at the Federation of Automobile Dealers Association, is joining us now to give us a quick take on, what the retail sales have looked like so far. Just to put it in a perspective, for FY23 as a whole, the total vehicle retail sales went up 21% for the industry, and the data will come up for you. Two-wheelers have done decently well in FY23, 18% growth, but it also came off a low base, and there was the post-COVID pent-up demand as well. Manish, can you tell us what is the expectation for FY24? The signs are ominous that there is a slowdown, especially in some of the pockets, like export-related or even in the small car segments like Maruti. Are you noticing that as well? And can you give us some key numbers?
So, we have already seen post-COVID very high growth in auto industry. And I think in the coming financial year, we expect a tapered growth, maybe because a lot of various factors are getting influenced for the auto industry in terms of inflation, in terms of, world talking about the global crisis coming in terms of cost pressure that we are continuously witnessing, in terms of regular rate hikes, financial interest rate hikes, and in terms of a lot of we will be seeing 6 airbags norms coming in. Cost of vehicles are regularly going up. So a lot of various regulatory norms need to be complied at. So all these are creating a hike in vehicle prices. So considering, and we have already witnessed a very new high for auto industry in last financial year. So we do see growth in auto industry, but it would be majorly in single digit.
Okay. Mr. Singhania, hi, welcome to the show. Well, passenger vehicle growth, it was flat on a month-on-month basis, but it was up 6% year-on-year because of factors such as a low base, etc. as well. Now that you're sounding a bit cautious in terms of what we could expect going forward, what is the monthly run rate that we could expect in the passenger vehicle segment? Is there a possibility that we could see maybe even a decline on a month-on-month basis going forward?
So we are not, we don't say that we will be seeing a decline. Passenger vehicles has created a new record and new high in last financial year, and record sales happened. And maintaining that such a high base is very critical. What is good about passenger vehicle is a lot of models are still commanding a high waiting period, and a few models are available in stock and with good schemes available for the consumers now. So overall green picture for the auto industry, passenger vehicle as such. And we had saw a rush of SUV sales in last financial year. And this financial year, we are seeing a lot of OEMs lining up their sedans for launch this year. And it may, sedans had really vanished or like really tapered down last financial year. And we just saw the launch of Verna, and a lot of new exciting sedans are going to be launched. So maybe there would be a revival of sedan segment, and also we are yet to see the revival of the entry-level passenger car segment, where it has retails have substantially gone down. And we have been asking government that if for entry-level passenger cars, if GST can be brought down from 28% to 18%, that can really give a boost to entry-level passenger cars, because entry-level passenger car is an essential to mobility of people, and we don't have a very robust.
Yeah, Mr. Singhania,
yeah.
you have been asking for a lower GST on the entry-level cars for a bit, but I hope that for everyone's sake, the sedan segment also comes back. I'm a personal lover of sedans, as against Sonia, who likes SUVs. I just wanted to understand, what is the inventory level that the channel is currently sitting on right now? You said some vehicles have long wait periods, some of them have inventory piling up, no takers for them, which is why there are good deals, etc. on them. At an overall aggregate level, what's the kind of inventory that the channel is sitting on?
So in passenger car segment, the inventory level goes up to 37 to 39 days. There is a clear segregation of two types of various models available with every OEM or every dealership. There are models which are commanding very high waiting periods, and models which are X stock or X showroom available with the dealership, commanding now very good consumer schemes that had really vanished during the COVID times. Now OEMs and dealers have come forward offering good schemes to liquidate these stock vehicles. What the OEMs really need to do is recalibrate and start manufacturing the vehicles which are heavily booked, rather than just building up stocks at the dealerships.
I know your focus is largely on the domestic market, but I wanted your thoughts also on what's happening with exports, because month after month, Bajaj Auto tells us that the worst of the exports could be behind them, but the numbers are not corroborating their view. Numbers are still quite weak, and this morning Motilal Oswal put out a report where they're saying that global headwinds continue to rise, hence companies having an export exposure could be further under pressure. Your thoughts?
So yeah, definitely, as I said earlier, global cues are not sounding very good, and we really need to see every second, third day we are seeing news on global recession, and a lot of countries are not playing up to the mark, or they are not able to perform as good as they should be doing. But as a country, India has been doing well, and we have been outperforming other countries. But exports will totally depend how their individual economies and how they individually progress. We are a very good export base here. We export a lot of vehicles, and we are setting up good factories and to export to various countries. But that really depends on their economic conditions and how they will recover the COVID impact fast.
Okay. Mr. Singhania, just a quick word with regards to tractors. This month gone by was mixed bag, but what is the projection going forward?
So yeah, tractors has not only proven as a means of agriculture support, but also as a term of employment. A lot of migrant people had migrated to their hometowns, and we can really see tractor sales creating a new high. And these migrant workers have also taken to tractors as as a means of employment. So we have been seeing a continuous robust sales in tractors. And if the monsoon goes on to be good, with the US already talking about the El Nino effect, if it doesn't affect our produce, then we see a consistent good growth in tractors in coming financial year.
Okay, all right. Thanks a lot, Manish, for joining in and speaking to CNBC TV18. That's the Federation of Automobile Dealers, saying that at best it could be a single-digit growth for the auto sector in FY24. So there are definitely visible signs of a growth slowdown after FY23, which was quite